We had David Bloom, the global head of FX strategy at HSBC, speak to us on TV earlier, and he said, actually, when it comes into the pound, nothing's priced in. It could soar, it could crash, it could hit 145, that's sterling, at the end of 2020 on a deal, or 110 on no deal. Now, what I would argue is that actually maybe what is starting to be priced in is a Conservative victory and Brexit going through. Would you agree?
Yeah, I would. I mean, I think at almost a 130 level, that's telling you that the market believes that there's going to be some kind of uncertainty with regards to Brexit, and bringing that into play is a Conservative majority. Now, actually, I would say that if there is a no-deal Brexit, if that were to come back on the table, we'd be looking at a 110 below.
Yeah.
And a 145 level to us is if you get a Brexit being taken completely off the table, so Article 50 were to be cancelled, and then you'd hit a 145. But we can't see that within a Brexit status.
OK, so your base case then is a Conservative majority. Boris Johnson's deal gets through, and then we start the trade negotiations. But what happens to the pound then? Because that's still quite a bit of uncertainty, as business leaders were pointing out yesterday at the CBI conference.
Absolutely, and I think that's really, really key for investors to really take into account, is that post the 31st of January, assuming that Brexit does go ahead, investors believe that this is bringing certainty to the UK economy, and it does to some extent. But then the real negotiations have to start. And considering the last 3.5 years has been so tough to come to any kind of deal, to have 11 months to come through in that transition period to actually get something at the end of the day means that we think that the prospect of a no-deal Brexit comes back onto the table. And you could see both the sterling starting to weaken and actually overall UK assets start to weaken as you get into Q2.
What do you want to hear from Boris Johnson and Jeremy Corbyn tonight?
Well, I think from Boris Johnson, we need to have reassurance that they will push through with Brexit and they will have some positivity at the end of it. I think the market really wants to know where that fiscal stimulus plans are coming through and how it's going to positively impact. They also want to see focus on the NHS and our other spending areas. From Jeremy Corbyn, I think everyone really wants to know that he is still want to be supportive of the business environment. Up to now, it hasn't sounded like that. But overall, I think people just want clarity. 3.5 years later, we just want to know what the election is going to produce and what's going to happen with Brexit. And I think that's really what investors just want to hear at the end of today, is we want to know what the route is going ahead.
Yeah, some investors, though, are bracing for more spending in the UK, regardless of the election outcome. And that's reflected in the fact that, for example, Blue Bay and Nikko have put on shorts on the gilt market. Is that something that you would be bracing for as well? And how would that impact your view on gilts, for example, if you offset it with your expectations for the BOE?
I absolutely agree with this. I think that we have fiscal spending plans coming in, either the Conservatives or the Labour. From the Labour side, actually, if the market started to believe that Labour success was likely, then we actually think that gilts would really be selling off very, very sharply. Up to now, it's not being expected. When we think about what the Bank of England is likely to do as well, we actually think the Bank of England is likely to stay on hold. But given the fiscal spending plans, that's going to push up the long end of that gilt curve.
What do your expectations around Brexit and for the UK economy mean for your euro call at the moment?
We've got a lot more positivity about Europe,
yes,
partly because of that certainty just being taken, the uncertainty being taken out of the market. For Europe generally, there is so much pessimism baked in. Investors tend to be under-owned on Europe as well. As long as the economy stabilises, as long as we know that the ECB is not going to be hiking rates anytime in the foreseeable future, absolutely. This is telling us that actually with valuations where they are, Europe is starting to become a more attractive prospect, and we've been advising people to start reallocating towards Europe in the last couple of weeks.